Hi, this is John Murphy, and it's Thursday afternoon, October the 11th. This is the second in our video updates that we've been experimenting with the last week or two. Today was a very interesting day in the markets. I actually posted two market messages. The first one I wrote today was a little bit more educational in nature, having to do with point and figure charts. But I want to focus a little bit more this evening on what happened later in the day today. First of all, just a little background. You know that we have been writing about some negative divergences in the market that concern us a little bit, like the New York Stock Exchange advanced decline line, the fact that the financials and the transports, for example, have not been keeping pace with the rest of the markets. But one that I wrote about earlier in the day today, which I'm going to come back to tonight, and that is the small caps. In fact, small caps and mid caps. You know, the large cap stocks are the only ones that have been hitting new highs. So when the small cap indexes and the mid cap move up to their old highs, that becomes a very important test for the market. And that's exactly what happened today. And that's where we're going to start tonight's update. If you take a look at the second market message that I posted this evening, the headline, market suffers downside reversal on higher volume. NASDAQ 100 has biggest drop. Small caps fail first test of summer high. Let's start there. If you look at chart 1, that is a chart, obviously, of the S&P 600 small cap index. The Russell 2000 index looks essentially the same. And obviously, small caps have been trying to catch up recently. You know, the large caps are the only ones that have hit a new high. Today, in today's early trading, the SML hit 445, which was the summer high. Unfortunately, it failed that test and closed down today. So, at least over the short run, that raises some concern because the fact that the small caps and the mid caps were not able to break out spilled over into the large caps. In fact, the small caps were the biggest losers today, and that kind of spilled over into the large cap stocks. And in fact, if you move on to chart 2, you'll see I'm not suggesting the damage was terrible, but you'll notice that the New York Composite Index and the S&P 500 looks essentially the same, that red circle there. They traded higher today and then they closed lower. That is what we call a downside reversal day, and if that takes place on higher volume, it carries a little bit more significance. And if you look at the circle at the bottom of the chart, you'll notice that we did definitely hit higher volume today. So at the very least, it suggests that the market has run into a little wall here, at least on a short-term basis, and it's probably due for some profit taking. Now here's where the biggest damage was today. If you move down to chart 3, this is the NASDAQ 100, or the cubes, Q, and you can see that the damage done there today. In fact, this index closed down 1.5% today. It was the biggest loser. We had some selling in the technology sector. You can see the reversal day, and it was a pretty big one. Market opened higher and closed down, but look at the volume. That red circle at the bottom of the chart, that is the heaviest volume in something like 2 months. So that tells us that the market, at least on a short-term basis, the market is putting in a little bit of a top here. We'll probably get some kind of a pullback. How much, it's hard to tell, but it does raise some caution flags. Also, if you look at the bottom of chart 3, you'll notice that the 14-day RSI is above 70, which is an overbought condition. So putting it all together, the market's in an overbought condition. We have small caps up against resistance. We have the financials and the transports lagging a little bit, and the market got hit with some fairly heavy profit taking today. So that is somewhat of a caution signal. And also, just to point out to you, in chart 4, where the real serious damage was in the tech sector, the semiconductors have certainly been lagging behind. That's not where the strength has been. But you'll notice that they were down over 2% today and broke their 200-day moving averages. So there was some chart damage done today. I don't want to overemphasize it, but you know, we've been kind of fighting this trend a little bit suspicious of these upside breakouts in the large cap stocks. I think what we saw today is the beginning of the first real test for the market. We'll now have to watch how it pulls back over the next couple of days, and then we'll get a better feel for it. But at least today's action does suggest that a little bit more caution in the market. I also would invite you to read my earlier market message, which I wrote today, which gets a little bit more into point and figure charting, also talks about the uptrend in the dollar, and the uptrend in the gold market, the continuing breakdown in the dollar. There's a lot more information in that first market message, so I certainly invite you to take a look at both of them. Anyway, I hope you like this new format. We're going to continue to fiddle with it over the next few weeks, but we've gotten some nice feedback on it, and we'll continue to work with it. This is John Murphy. Have a nice evening.